Let's talk about Eli Lilly, the stock that is up 100% over the last year, whereas the S&P 500 is only up 27%. We can see that this article talks about how analysts have revamped their stock price targets ahead of Q2 earnings, and how Eli Lilly, with a market valuation of nearly $900 billion, has vaulted past Tesla into the top 10 list of United States companies. We can see right here, they point out that Eli Lilly has added more than $360 billion in market value this year, vaulting it past Tesla and placing it in among the top 10 largest U.S. companies in terms of market capitalization, largely on the back of hopes that its newly developed weight loss drug will expand into blockbuster status. Their weight loss drug, known as GLP-1, has been taking the pharmaceutical industry by storm, with overall sales expected to approach $50 billion this year before doubling to $100 billion in 2029. However, this attention has attracted a lot of negative eyes from politicians like President Joe Biden, who have stated that without substantial reduction, this drug has the potential to bankrupt the American healthcare system. So it could be that in the future, politicians will step in to regulate this drug somehow, which might end up having a negative impact on profits. But in the meantime, this drug has been showing very promising results. And outside of this, Eli Lilly has also been diversifying their investments in other areas in order to improve their business as well. Some of their growth catalysts include newly developed drugs for diabetes, obesity, and cancer treatments that have contributed to their revenue growth and their increased market share. They have a strong research and development pipeline that has shown significant progress towards developing treatments for Alzheimer's and arthritis, positioning Eli Lilly well in the high-demand therapeutic industry. And at the moment, Eli Lilly is still one of the main market leaders in the pharmaceutical industry. If we take a look at their financial statements here for the first quarter of 2024, we can see their income statement shows revenue of $8.7 billion, up 26% year over year from $7 billion in 2023. We can also see that their net income comes out to about $2.2 billion for the first quarter of 2024, up a whopping 67% from only $1.3 billion of net income in the first quarter of 2023. Then if we go to page 7 here to take a look at their balance sheet, their statement of financial position, we can get a better look at how much cash they've actually been adding to their business through their equity section right here. We can see their retained earnings have increased from $10.3 billion to $12.5 billion from December 2023 to March 2024. So that's only in a matter of 3 months that Eli Lilly has been able to increase their cash position by $2 billion to almost $3 billion. On top of that, we can see their additional paid-in capital line here has actually reduced from $7.25 billion to $7 billion. And this signifies that Eli Lilly has essentially been buying back a lot of common stock, which has been reducing the outstanding shares they have on market, increasing their share price even more as they end up increasing their revenue and reducing the amount of shares they have outstanding. Then lastly, if we go to page 9 here, we can see their cash flow statement. For the first 3 months of 2024 compared to 2023, they have less operating cash flow. But if you look at their financing activities, their dividends paid have increased. They've paid out $1.1 billion of dividends to their shareholders in the first quarter alone, compared to only $1 billion in the first quarter of 2023. That being said, they purchased $0 of common stock in the first quarter, whereas in the first quarter of 2023, they purchased $750 million of common stock. So although they've prioritized returning value back to shareholders through their dividend payments, they haven't really returned value back to shareholders through their common stock repurchases. But that being said, their stock is still up a lot over the last year and over the last 3 to 6 months or so. As we can see, year to date, they're up 61%. If they do hit $1,000 per share, then you might end up seeing some sort of a stock split, which could end up increasing the share price even more. Now I've prepared a discounted cash flow model to try to figure out the intrinsic value per share for Eli Lilly. We can see that I'm using a growth rate of about 8%, which I got from their historic free cash flow growth. In 2019, they had free cash flows of $3.8 billion, and in 2022, they had free cash flows of $5.2 billion. The only reason why I'm not using their free cash flow for 2023 is because it actually dipped precipitously as a result of increased cash expenditures that they experienced in 2023. So I thought that that would be an inaccurate representation of the increasing amount of their cash flows, because their operating cash flows actually did increase. It's just they spent more of their cash flows, which is why their free cash flow decreased. So we can see I'm using a historic growth rate of 8% as a result of this calculation. And then for the weighted average cost of Eli Lilly's capital, it comes out to about 3% for their debt and their equity, which I got from this calculator right here. You can pause the video to get a better look at it if you'd like. Lastly, their shares outstanding at the moment total out to about 900 million shares. And with that, we can see the intrinsic value per share comes out to about $113, which is a severe under or overestimate for Eli Lilly at the moment, trading at $930 per share. That puts them at way overvalued compared to their estimated intrinsic value here based on their free cash flows of their business. But keep in mind, this isn't a fully encompassing intrinsic value estimation. There could be a lot of other variables at play here that could make this metric a little bit inaccurate, so to speak. For example, obviously, with all of the drugs that Eli Lilly has announced and all of the drugs that they have in their research and development pipeline, their revenues and profits in the future could end up justifying their current share price for investors. Now we can see this competitor or industry analysis here comparing Eli Lilly to two other pharmaceutical companies, Pfizer and Merck. We can see compared to these two, Eli Lilly in terms of profit margins is dominating. They have the highest return on equity by far at 50% compared to Pfizer's 2%, and Merck, they don't even have more than 1% return on equity. They also have better profit margins, gross profit 79%, net profit 15%, return on assets 9%, with Pfizer and Merck coming close in gross profit margin, but falling down to about 1% to 3% around the net profit margin area here. So obviously nowhere near as competitive as Eli Lilly. Lastly, we can see that for PE and price to cash flow ratio, Eli Lilly is a lot higher, but for dividend yield, Eli Lilly pays a much smaller dividend compared to their share price that Pfizer and Merck pay. But that being said, Eli Lilly's share price has probably increased a lot more than Pfizer and Merck's as well. So you can make the case that they've actually ended up returning more value back to shareholders, even though their dividend yield is a lot lower. Lastly, I wanted to compare Eli Lilly to some other companies that we've looked at on this YouTube channel in the past. Obviously, Eli Lilly was not trading below their intrinsic value per share, so they don't make it onto this table of the top 10 companies we've looked at that were. Then if we look at growth rate, Eli Lilly's growth rate was not competitive enough to make it onto the growth rate table or the dividend yield table for their dividend payout, but you can see the top 10 companies we've looked at that were on these tables. For gross profit and net profit, Eli Lilly comes in third place for gross profit at 79% gross profit margin, but for net profit margin, they only had 15%, so that's not good enough to get them onto this table. However, we can see that for year-over-year revenue and earnings growth, Eli Lilly has been very competitive quarter to quarter compared to all of the companies that we've looked at on this channel. For Q1 of 2024, revenue growth for Eli Lilly was 26%, putting them in fifth place so far, and 67% for earnings growth, putting them in third place. We can see they've been consistently showing up on all of the tables here. Q4 2023, they make an appearance. Q3 2023, they make an appearance on the revenue growth table. And then Q2 2023, they also make an appearance on both tables. So Eli Lilly consistently across all industries, tech industry, pharmaceutical industry, restaurant chains, manufacturing, franchise businesses, wholesale retail businesses, tech companies, virtual reality companies. It looks like Eli Lilly is competitive across all of these industries in terms of revenue and earnings growth. So that's obviously a very good sign for their shareholders. Lastly, I wanted to look at Eli Lilly in terms of their stock growth over the last 5 years. They come in fourth place with stock performance of around 700% over the last 5 years. They're actually up now 735% over the last 5 years. So that puts them in fourth place behind Tesla, Supermicro and NVIDIA. So let me know in the comment section down below what you guys think of Eli Lilly. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.